Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk a little bit about what's happening in the markets. I've got one of the bigger stock charts that I've seen in a long time. That is Avis Budget Group, rent-a-car company, and I mean, this is absolutely amazing. You can see just a massive crash that developed yesterday of about 37%, and today, I mean, we're going even lower by about another 42%. So, I mean, it's absolutely astounding to see this kind of action in the stock market when you're looking at about an $800 high, $847, and you're now trading $254 in just over 24 hours. So it's absolutely huge volatility. Lots of action. Millionaires were made. Millions were lost in that type of trade. I was talking with a trader earlier today, a gentleman out of the Middle East that's an astute trader, was telling me all about Avis and trying to get in up here on a nice sell and getting locked out by the brokerage. So there's a lot going on here. It seems like every asset class is on fire. Right now, the Iran war continues to be the number one market driver in the world, and we're seeing a lot going on with regards to a potential deal. We're seeing saber rattling in the Strait of Hormuz, Iran seizing ships, the U.S. seizing ships. So there is some escalation. But notice, I mean, this is really the big thing I tried to point out yesterday. The markets are quiet. Stocks are quiet. Risk assets relatively quiet. You got the Dow Jones Industrial Average off just about 80 points. S&P 500 about flat. The NASDAQ is up. The NASDAQ up slightly, so pretty much at scratch. So when we look at what the headlines are, it's very important to see how the markets are reacting to the headlines. And right now, we've got saber rattling in the Strait of Hormuz. We've got a lot of action, not much happening in stocks. That tells us a couple of things. Number one, that things are starting to settle into norm. The new norm seems to be war in the Middle East. It seems to be the ceasefire, as shown by our VIX we talked about yesterday. CBOE Volatility Index, long-term average 21. We're trading right down around 19. So the markets are getting used to this concept of there being a war that's ongoing, that may be severe, that may escalate, or that may actually back off and have a peace deal in relatively a short order. So when we're watching our price action and we're looking at all the different things we can trade and all the different, everything from stocks to futures to Forex, all of it, when we look at it, we have to start to think about what's happening big picture. The markets are getting used to all of it. They're getting used to all of it. So I want to welcome everybody back to the Trading Room. Jason, good to see you. Sup, Jason? I hope you're doing well. I'm confident you're doing well. I got to get hope out of my lexicon. I'd say hope way too much these days, but times of war, you start talking about hope. Andrea Garwal, good to see Andrea. Welcome. Atuku, good to see you as well. If there's any markets that you'd like to look at today, feel free to ask me. We will certainly go over them. I'll show you my levels. I'll show you my playbook, what I'm looking at. We've got a lot really scheduled for today. We're going to look at U.S. oil, natural gas, starting to push lower. Big time move out of natural gas, about 4.25%. Bitcoin, we still have that Bitcoin trade idea out there. I'm going to reiterate that again because I think it's going to come into play relatively soon. And also the U.S. dollar, Canadian dollar, and the Australian dollar, Canadian dollar. I want to look at both of those CAD pairs because they are sort of linked to that. Canadian dollar is linked to U.S. oil, and we really want to take a look at what's going on, not just in the energy markets, but in those commodity dollars located on the Forex. So let's see. Ralph H. Good to see you, Ralph H. Bobby Bob, always a pleasure, guys. Remember, if you want to trade anything that we talk about today, any trade ideas or any, really anything, any type of any of the markets that we cover, feel free to do so. You can see Switch Markets, bring your trading ambition into focus, 24/7 customer support. Remember, if you have any questions at all, I get a lot of questions over on how to trade. That's what I am, a head trading coach over at How to Trade. Remember that you ask me a question about Switch Markets, I can go find you the answer. I'll do my best to always keep you in the know. Best thing to do is to go right there to that live chat. That is a manned live chat, so you can get somebody on the line relatively quickly, and they will answer all of your questions. They're well-versed in pretty much anything that anyone can ask them. So, all right, let's go ahead and get started here. I want to take a look at the news, and then we're going to go ahead and dive in to some more price action. I think it's important to start sticking, not really sticking, but looking at crude oil in a different light. I covered it yesterday, and it was like, this is a really bullish market. It's a very bullish market. The reason why is we're waiting for any little thing to happen, and crude oil will explode, no question about it. U.S.-Iran war evolves in a naval standoff over Strait of Hormuz after both countries seize ships. The United States has ramped up its mine-sweeping operations in the region. Also, Trump gave an order on killing anybody that's out there in a boat laying mines. Also, we saw the United States have a couple of landings on top of some of these oil tankers and things, or cargo ships that are going through the strait. There isn't really much I can say about it. There really isn't much I can say about it because the information is just so incongruent. That was from CNBC. I could show you a completely opposite report. That one right there tells us escalation. I could show you one maybe from Fox News that says, things are settling down. So take whatever you read in the mainstream media with a grain of salt. I think that there's a lot of different things going on right now in the disinformation realm. We've never seen a war like this with regards to information. If you go on X, you can find so many different reports on so many different things. It's really difficult to know which way's up. So this is one of those ways, this is one of those times when I say fall back on your charts. Watch your pricing charts, and that's going to give you a good idea of what's really happening in the region and what the situation really is. So what's the situation? Well, according to our number one barometer of Middle East tension, WTI crude and Brent crude, it looks like the situation's ramping up. We've got U.S. oil up about 3% today. We're back above that threshold, which is right at 94.72. 95 is the big deal. To me, 95 is the line in the sand. So if we're above this 38% level for U.S. oil, we're extremely bullish. We're extremely bullish. So for me, I'm probably buying 94.75s the rest of the day, looking to take long scalps from there. As far as what can we expect maybe in the near term, this is very simple, very, very simple. If you see escalation, if you see the ceasefire unwind and end and the bombing continue, which a lot of us think is probably coming, but we're not necessarily certain. If you do see that, then you'll see crude oil rally probably right up there and take out these highs up around 120. If you see a peace deal, if you see Trump, okay, we declare victory, we've got to deal with Iranian leadership, whoever that is, I don't think anybody knows right now, or they have some sort of deal maybe with some different factions of the Iranian defense. Maybe that's possible as well. Maybe there's regional deals in place. We don't know. We just don't know. But if that's the case, then we can definitely see crude oil sell off down there to about that 78% level, which is an area that I really like, right down there around 68. In my opinion, we're going to be trading 68s to 70s as soon as this war has been wrapped up and concluded in some sort of meaningful fashion. So we're watching closely. WTI crude, to me, is better than the news. You can watch it and say, okay, tension's back. The angst, even though the VIX is down, it's about 19. So risk assets, there's not a tremendous amount of pressure on them. That crude oil is still extremely bullish and says, hey, This war's not over and you're not out of the woods yet. That's the number one thing I would point out about reading your commodity markets. A lot of times the charts, there's an old saying, you show me the charts, I'll tell you the news. That is exactly the case when it comes to the oil markets right now. This is a good look at Brent crude. You see that we are way above that 96.31 level. You'll notice that these Fibonacci's are drawn from this spike low, which was last December's low, and really encapsulate all of 2026's actions. You could bring your Fibonacci's up maybe and come right here from the beginning of the war if you wanted to. To me, I wanted to get the entire wave because we already had some tensions or we had some rallies really coming across the board in crude oil in January and February, and a lot of that had to do with the dollar sort of sliding a little bit. So it's been a real bullish year for crude oil. Wars have a way of doing that. So right now, UK oil is trading right around 105. We put out a YouTube short. Actually, it was made about 2 weeks ago before I went on vacation. I was talking about the inversion of the spread between the UK and US oil. Well, that spread is back in line now. UK oil is trading at about a $10 premium to US oil, and that's all about supply in the Strait of Hormuz. So we're watching this closely, but that's really the bullish area for UK oil, 96.31, somewhere in that zone, and US oil is going to be right around 95. Those are the key levels. Above it, bullish. Below it, then we start to question whether things are winding down in the Middle East. Now, as far as a quick look at a TPO chart, I got a question earlier today. Says, Shane, I want some TPO action. I said, all right. I'll pull up a TPO chart, a time price offering chart, and maybe we can get a trade or two going. And you can see right now today, time price offering, there's your point of control, plain as day right there. Point of control is right around 94.36, somewhere in that zone, 94.37. That's the area where we've done the most business. We have broken from that zone. 30-minute chart, that's the best to use when you're looking at TPO charts. Nice compression, break. Judging by this chart, it looks like the war is escalating. Now, that's just a 30 minutes. That's just 30 minutes. That doesn't mean that it's going to be like this forever. There's the big rally. You'll notice this top dotted line is sort of your value area high and your value area low. The value area is where we've done a majority of the business today, and the point of control is the price point where we've done the most business. Very, very important if you're going to be looking to trade market profile that you understand these concepts. I'm thinking about making a video, maybe a couple of video modules on this type of trading because I found it to be incredibly effective since this war started. Fibonacci's are great and all that stuff's great, but when the market becomes chaotic and there's a lot of liquidity and a lot of action, TPO charts, market profile, can really help you. It can really help you read what exactly is happening. So according to this framework, we've got a value area high, value area low, point of control. We were trading the point of control beautifully. That's why it's the point of control. And then we broke. We broke out. We broke above our value area high. And now we are making a run at the highs of yesterday, which was, well, it's about 6 p.m. So that would be today's high, today's session high. And that high is right up there, about 97.22. We're making a run at it. This chain up here is thin. My guess is we test that area right up here at the daily high, 97.25, and that's about another $1. So a lot going on in WTI crude. It is rocking and rolling. On the contrary, natural gas is getting absolutely hammered. Natural gas is off about 4% today, and we're seeing really an interesting run break beneath 2025's low. So we talked about being able to scalp trade right from this zone. It was fantastic. It happened while I was gone, of course, but a nice big rally, and now you're coming off in a big way. This is really counterintuitive. Typically, when you're going to see a war or anything that is not decisive, but is divisive or as big of a catalyst as what's going on in the Middle East, then you're going to see bullish price action across all energies. That has not been the case for natural gas. I want to be very clear. I know that there's a lot of people in the media that are going, well, natural gas. Hey, it's not happening. Natural gas is in a free fall. It is showing spring seasonality. So whether that natural gas is coming online from the United States, whether it's coming on the line from Russia to make up the shortage that's being created from the Persian Gulf situation, it doesn't matter because gas is coming down. So right now the market looks at the situation. It perceives that there's going to be plenty of natural gas for everybody in the near future. Unbelievable. I'm shocked that gas isn't trading, probably up right around 4, maybe even 3.5. Haven't got it. So when we take a look at a weekly, we're sort of looking at maybe the bigger, broader picture here with this CFD product. What can we really say about it? I mean, is it time to buy it? Well, I mean, I thought right down in here was a pretty good time to buy it. We're moving lower. So if we're going to look at that, if we're going to try to find a level that's maybe decent to trade, what could you really even look at? I could run a Fibonacci, of course. That's my weapon of choice, if, is one of these jobs. Something like this. You broke beneath 78%. We're going lower. We're going a lot lower in natural gas, and that's a real head scratcher given the current geopolitical situation. So one of the things that I would recommend when you see something like this and you're looking to get in on the trade and at least see that maybe you haven't missed it is just to switch your strategy. So we work with Fibonacci's, horizontal support and resistance levels. Let's take a look at the 920. Let's take a look at the 920 for natural gas. 920 EMA crossover. All right, that is when the 9 crosses under the 20, you sell, and when the 9 crosses over the 20, you buy. That simple. Take a look at what happened here. And this was really a beautiful setup. This sell right here has taken you to the promised land right there. You're up above that 70 level there on your RSI. Sort of gave a little bit of daily confirmation, which you really don't need. Beautiful buy right there. Got a great run. And then we came down as fast as we went up, and now you're just trending lower and lower and lower with natty gas going against all the geopolitics of the day. It's astounding. It's astounding the way that that's working. I would be watching for a crossover. If you did get the 9 to cross over the 20 EMA on a daily type of a time frame, could be a beautiful swing trade. Could be a beautiful swing trade. I find it hard to believe that we're going to go much lower, but we're breaking beneath last year's lows. And typically when that happens, you're going to see an intermediate term trend develop and maybe take us down to a different level that we haven't seen in quite some time. Unbelievable stuff we're seeing in the energy markets. Absolutely unbelievable. To say it's disjointed doesn't do it justice. It really doesn't do it justice at all. Let's go and take a look at gold. I know I'm going to get some questions on gold, so let's just cover it right now. A daily 920 look at gold. You can see this is exactly why I was so negative yesterday. I actually caught some flack going, Shane, you're down on gold. Why are you so down on gold? And I said, well, because it's almost impossible to trade it right now. I mean, unless you're going to take like pivot points or range numbers and trade reversions back to the mean type of a strategy, it's really difficult to put our finger on what's happening here. It really is. So if we were taking a look at this market right here, daily chart 920 daily, typically when you get these moves right there, that doji was your cross under, believe it or not. You got the big roll. It's funny how many dojis we get on these crossovers too. Daily doji, big time sell-off, and now a rebound. And then there was your buy. You got a little bit of love there, and now you're coming down, probably going to get stopped out here, and you have a sell signal setting up. Always remember this. When you're trading a crossover strategy, I don't care if it's 5-8-13. I don't care if it's a 920 EMA crossover. I don't care what it is. When you start to see frequent crossovers, it's called a weave. It's called a weave formation. And what that weave formation signifies is the market is flattened out, you're getting frequent crossovers, and you're going to get chopped to death. You're going to get chopped to death. All I'm saying is this. If you're going to be trading something like a gold right now, you've got to wait for disequilibrium. You've got to wait for this market to commit one way or the other and then make a play. If you're holding longs right now looking for the return to 5,000, I'd say, okay, God bless you, go for it. Best of luck, safe travels. But if you're trying to day trade or swing trade this thing just off of indicators like our 920 EMA crossover strategy, I would really encourage everybody to probably stay away from that type of a strategy right now, just because it's very flat. And frequent crossovers on a 920 typically means you're going to get chopped up, and your probability of getting in on a move like we did right there just isn't there. It's of course the market's going to break, of course. But if you're going to trade like this and you're taking the buy, just keep your leverage in check. Don't get blown out of the game. It's not worth it right now because the market realistically is flat. It's a dead fish. So single to weekly here on your let's see on your gold market. Okay, see you're still really working that long-term bullish trend. Look at this crossover. The last weekly crossover you had was back in 2023. Now this is how investors trade. You take a good look at that and they say, okay, I've been long for the last 2 years or 3 years. And that's great. And you made a fortune doing that. But what do we do now? The market is definitely flattened out. You can see your 9 on the weekly chart. It's just sort of parallel. It's really flat. What could we do to maybe build a decent trade? I still like 5,000 as being a potential topside target in this market. However, I couldn't tell you when we get there. We may not get there, until the fall, until the summertime. It just really, we don't know. So right here, you got 45.90. It's going to be a 38% retracement. You've got an opportunity potentially to bid that. I do like that trade. I think that gives us a good opportunity to win. I believe, what do we have it dialed in yesterday? 45.988 or something like that. Or excuse me, 45.88. 45.90 is fine. Somewhere right in that zone, maybe 45.92.50. I'm partial to quarters. So potentially, yeah, you could get a little trade right there, a little bump to the bull. I think it's a fascinating trade, but I wouldn't be doing much of anything in gold until I saw some evidence that this market was moving. Look at what's happening in gold right now. We're only off about 0.5%. Those daily ranges were huge. We were seeing big moves, 4, 5, 6, 7% in a day, and it was pretty regular. We're not seeing that now. We're not seeing it now. It just isn't coming our way. It's not developing. So when we're watching this gold market, I can build a case potentially to take that bid from 38%. But as far as holding shorts, I'm not really interested in that unless you get that daily crossover and you wanted to take a risk. Then you could. Then you could take it. Stop loss is going to be probably right up above this swing high, maybe 49-ish. You could even put it right above this trigger bar here, maybe put it up, 47, 79, something like that, and then take the short and look to get a little bit of a move down, maybe to our key level. That might be a decent trade, but as far as a position in the gold market, boy, I just am not even remotely interested. Let's take a look at silver here. Or excuse me, that's copper. We probably should pull a copper chart one of these days. Let's go to the silver. We'll turn our TPO off. Very difficult to get any sort of volume information that makes the time price offering approach work, especially on OTC markets. You don't get – I highly recommend if you're going to use that TPO framework, the volume framework that you're going through an exchange. So you're probably going to be trading futures if that's the case, maybe stocks as well. All right, so here's a good look at our silver analysis, right? And all this stuff, all these Fibonacci's and all this great analysis, right? It's all supposed to make us money. We had a sort of our cup of the handle back over there. Well, we won't talk about that right now, but you did have a sort of that weekly level. Pointed this out before we left on vacation. Spike high, spike low, pullback, and that's just an absolute home run. I mean, it's just a kill shot from about 82.91. You see the top right there, 83. So you're right there at 83. You're selling 82.91s. I mean, it's beautiful. It really is beautiful. Price is back down to 75. 75 we had really labeled as our long-term catalyst. It definitely is that. It definitely is that. We cannot seem to leave 75. There's your daily chart. We traded 75. We sold off, and then we came back and got compression. Compression, we broke up, and we came back, and now we're probably going to get compression. So how would you trade this in this situation? Really difficult. You can either treat 75 as downside support. It's not a bad play, but you have to watch your risk because right now these markets don't really know what they want to do. They don't. I mean, since we've been talking, we're seeing a significant sell-off right now in the Dow and the S&P. Remember, I just a second ago said those are flat. Now you're off 300 points in the Dow. Things are happening. Things are happening all the time. So when you're talking about taking a trade in this environment, whether it's in silver, whether it's in gold, whether it's in stocks, you've got to be extremely diligent about the current news cycle and what price action is doing. You got to know that. Let me see. Hemud, good to see you. Hemud, welcome. Greetings. Greetings to you too. Like I said earlier, if you guys have any questions at all or any markets you'd like me to cover, I'm more than happy to do just that. All right, let's go ahead and pull up the E-mini S&P 500 here. No question about what's happening here. This is the June futures contract. This would be your US 500, CFD. But let's go ahead and pull up this E-mini contract, and maybe we can get a trade or two. So the first thing that we're looking at here is just a bullish trend. It's been an absolute bullish run since right around, really throughout April. There's March 31st, and they all stepped in and started buying, and this is in anticipation of the war being over. No question about it. So that's the evidence. That's all the evidence I need. I don't need to sit there. I don't need to watch CNBC. I don't need to watch Bloomberg. I don't need to watch any of it. We can look at our charts and say, what does this mean? This is the S&P 500. What does this mean? We turn the page from March. It means that the investors are all expecting the war to be over very soon. That's the bottom line. The pullbacks have not been significant. That's a bad day. It's 0.75%. It's nothing. These gains are huge. The 1%. What do you got right there? 3%. These are big moves. So we're bullish, no question. Sort of flat here. We're starting to come off a little bit. So on intraday trade, what would I want to do potentially as a late day trade in the S&P 500? Beautiful pullback right there. If we could get a big crash, maybe somewhere right around 7,000 and a quarter, that would be a great trade going into tomorrow. However, you're not going to get that today. You're not going to get that big of a move, barring something unforeseen and very serious. So let's take this down to a 30-minute chart and go ahead to our TPOs and see what we have. Okay, so that's a pretty good crater job right there in the last 30 minutes. Minus 0.63. What are we making a run at here? We're making a run at our overnight low, 6 p.m. last night, my time, so be 8 p.m. Eastern. You're looking at that low down there about 71.05. Do you think we make a run at it? It looks to me like you're going to test that low. So remember, what just happened? We looked at crude oil. Crude oil is going to run and test those overnight highs, and you're seeing the exact opposite thing in the E-mini S&P 500. So coming off big, let's go ahead and pull up our TPO charts here. This works very well for a contract like the E-mini S&P 500, and there it is. Absolutely, there it is. So there was sort of your intra-session point of control. You had sort of an overnight point of control right in here, and now we're making a run at that lower value area. Interesting stuff. Absolutely interesting stuff. Coming off big. What do you think the best thing to do is here? I mean, honestly, there's not much we can do. One of the things we could do to be hyper aggressive is we could take this down to, say, a 5-minute chart. All right, and you can see sort of there's your schematic. Excuse me, there's your TPO on your 5-minute chart. I don't really know that you need to be doing that, but something like this, 5-minute chart. Clearly, we've broken to the bear. Fibonacci retracement. What's that right there? Mid-session. You probably step up and sell right up in here at 38%. That's probably a pretty safe bet, but I don't particularly like it because, believe it or not, it looks like the market is absolutely falling out of bed, but you're not trending. Your daily market structure does not suggest that you are trending. So if you're not trending, probably not the best idea to jump in there and be aggressive selling 38s. However, if you wanted it for a tight scalp, you could certainly do that. So that would be the sell right in there until we move a little bit lower, which it looks like we could. We could definitely do that. Another way that you could approach this type of trade is just go right over here to our 920 EMA crossover. You can see right there was your buy. Great swing trade. I mean, that made a fortune. Let's go right here to a 5-minute chart. What do we have? Okay, so essentially, you got the big move right there. There's our purple bar, our coded, our 920 coded. You can see right there. What do you have? 10:05 a.m. my time, 12:05 p.m. Eastern, and that's going to be lunchtime essentially. The sell, it rotates against you. You know, your stop loss probably has to be right up in here, maybe up in here, but then you get in just on the big banger and the big move. So clearly there's a news item out that's shaking sentiment in this market. The VIX, when we started, you can see the VIX is up to about 1960, so up about a few percent there on that move. So angst is entering the market, and stocks are on the moves. Right now, let's see, the Dow Jones Industrial Average off about 384 points. Okay, so the situation's getting worse. So let's go here. Let's take this down. I mean, this is the Dow right there, 5-minute chart, falling out of complete bed. Absolutely falling out of bed. So what's happening? There's got to be something in our news cycle. Let's go ahead and just let me take a look real quick. There's got to be breaking news somewhere. Let me see. Software shares slump, oil jumps, midday moves. Who knows? U.S.-Iran war evolves, naval standoff. It's the same headline. Trump gives orders Navy shoot and kill any boat laying mines. IEA chief, we're facing the biggest energy security threat in history. Take a look at our natural gas chart. That may not be true. And Americans cut spending. That means absolutely nothing. So what is happening? The markets are getting out in front of potential war developments. There's no question about it. Absolutely no question about it. You can see since we've been talking for the last 25 minutes just how much the markets are changing. We just talked about U.S. oil. U.S. oil is exploding to the top side. It's now we're printing about 96.68. We just literally talked about this. This area right up in here is going to come into play, 97.22. It's a daily high. We could probably step up and sell right in front of that. But look at this rally. I mean, these markets are alive. And that's what makes it so difficult to try to be a true day trader. A true day trader is going to be bullish or bearish at any given time, trying to get these big moves. And while these big moves are here, they really are choppy. There's no rhyme or reason to much of any of it. They just get the market goes up, the market goes down, and a lot of people lose money in the process. So watch your risk, watch your leverage, stops down, leverage in check, make sure that everything's lined up with where it needs to be, and then fire away. but just do so understanding the risks that you're taking because they are significant. I mean, these are very choppy market conditions, no question about it. A little more coffee there. All right, let's go ahead and go do our trade update. I did the same trade update yesterday. We'll have another trade idea out later today. I want to see how this close comes through, and I'll probably write something up a little bit later today and put that out on the wires this evening. And remember, these are always available at howtotrade.com under our analytics section. Also, I put them out on ShaneV_trader at X, and then also on LinkedIn on our How to Trade page on LinkedIn. So you can see them all when they are released. This is an interesting one. We're looking to sell right up in front of that 62% retracement on the monthly chart. I think it's a pretty good level. So we're looking at about 82, 750, somewhere in that zone. That's going to be your short. I'd be watching this closely. I think we're going to get an opportunity potentially to get it. Right now, price is sort of stagnating right around that 78 level, 78.9, 50% of this big 2-month sell-off range, and then the previous 2-month rally. So a lot going on right now in Bitcoin. We finally broke above that 70 level that I was harping on forever. We've broken above it. We're driving towards 80. If we get a chance to sell maybe 82, 750s, that could be pretty good, and that's going to be our trade. I think we're going to get it. I really do. I think we're going to have an opportunity to short right up there probably in the next few days. If I had to wager, if I'm a betting man, and I am, I think we'll have an opportunity to get that one relatively soon. Bab G, it's good to see you, Bab. Welcome. All right, let's go and take a look at our Week 17 schematics. We've got the Iran war was Monday. It's going to be every Monday. The Iran war is going to be a big deal. So you're always going to want to know where that's at with regards to the news cycle and what's happened over the weekend. Every single Monday until this thing is settled. That's going to be the way of it. Tuesday was retail sales. Not too bad, a little bit better than expected. Wednesday, UK CPI came in hot. EIA crude oil inventories showed another build. And inventories are now in the United States 3% above the 5-year average, which is significant. Which is extremely significant. Thursday's initial jobless claims and S&P Global PMIs. That was what we're going to look at today. And then Friday's No Donation Friday. We don't have much slated for tomorrow's action. There's no real economic events. It's just going to be more war stuff, and we'll be sure to cover that as well. News of the day. Initial jobless claims is going to be our headliner, 214,000. That was a little bit above expected, 211, and up significantly from the previous release of about 208. So about 6,000 more people joined the unemployment rolls. S&P Global Services PMI, it's an abstract figure. So I would not worry too much about what this means. You can see that it came in a little bit above expectations. Theoretically, anything above 50 for these PMIs is considered to be at least a little bit bullish. Right there, 51.3 over 50.5 expected. That's services. Manufacturing, 54 up over 52.5, and then the global composite PMI is 52 over 50.6. So according to these numbers, services and manufacturing sectors here in the United States are getting a little bit better. This will be a trend to watch, but we're going to be breaking things like this down a little bit more as the year goes on. I don't want to talk too much about it now because we're not really closing in on a recession. It looks like we're going to have some positive economic growth for Q2, but that's really an interesting dynamic. When we start talking recessions, typically all these peripheral indicators, all these metrics, they don't really tell us much of anything. They can, if you add them all up, meaning if you take like the S&P Global PMI and maybe the ISM PMIs and some other data, then maybe you can take all these data points and build a case. Personally, I find it to be incredibly abstract and does not mean a whole lot to me in my trading. For instance, these numbers were all topside beats, and I'm watching the markets fall apart right now, down almost 400 points for the Dow. So watching that closely. These numbers, don't get carried away. The one we're really looking at is initial jobless claims because that speaks directly to the employment situation. So when we look at jobless claims and initial jobless claims, anytime you see a trend where it's rising, that means that unemployment's getting worse. It means the unemployment rate's going to go up and the labor market's shrinking. Why? Because those folks are headed to the unemployment line for the first time. That's why it's initial jobless claims. Now, they put these numbers out weekly. This is a good look at your last 3 years. You can see we were a lot higher coming out of COVID. Then we sort of came way down when everybody went back to work around 2024. 2025 is sort of an interesting time. Saw really a big boom in sort of unemployment last fall, if you remember, when those numbers were suspended. I don't know if you guys remember any of that because of the government shutdown, but the unemployment was bad. And we saw those numbers, the NFP numbers revised earlier this year. They were brutal. They weren't very good at all. And now you're starting to see employment sort of trend, these jobless claims trend down a little bit. So we're seeing probably an improving situation. However, there's always room for improvement, but these numbers seem to be back within, I would say, legitimate, 3-year norms. I wouldn't take it back to COVID because those were all out of whack, but these numbers here, you're always going to see peaks and valleys. This is probably somewhere right around the median value of the last 3 years range, so I don't really see it as being a big deal either way. The other thing we can look at today is going to be your 4-week T-bill and 8-week T-bills. Not much going on here. The yields are sort of frozen as we try to figure out what's going to happen in the Iran war. 3.605 on the 8-week T-bill means that those rates fell just a little bit, but the 4-week T-bill auction, which is the 1 month and the 2 month, essentially, you're looking at an unchanged yields. Remember, yields go up when the government's trying to attract money and monetary policy is getting a little bit stiffer. Those yields still relatively high, I would say, at least for the last 5 years or so. But, they're static right now. Everybody's in a holding pattern because they do not really know what's going on. That's for sure. Let me see, AJ, what just happened to the market? That's a great question, AJ. We're looking at about, 355 now on the Dow. So the Dow's headed south. The S&P 500 is heading south. We were sort of just watching this E-mini S&P 500 futures. You're not seeing much love here. This is good to look at our 920 EMA crossover. There's a big break. If we wanted to trade, sort of there's going to be your level, something like that. You want to sell up there. I think it's really difficult to trade. You could sell right now if you wanted. I think you could really get hurt, though. The market's, believe it or not, it's fallen out of bed, but it's not a trend. It's not a trend. It just isn't. On the 5-minute, you could argue, say, yeah, it is, Shane. That's trending. And I go, yeah, but it's not really. If you step back to, say, a 30-minute, it's more of a sweep. It really is more of a sweep. So you take your U.S. session, which is going to be your U.S. session range, New York session, something like that. Spike high to a spike low, somewhere in that arena. Maybe a pullback sell late in the day from there. But it looks to me like you're probably going to get a significant bounce. I find this to be really difficult. Really difficult. It's hard to know when those moves are coming ahead of time. My guess is somebody said something. Who knows? Somebody might have leaked something, the way that these markets work. All right, I did want to talk a little bit about our poly-market odds. We haven't looked at these in a few weeks, but these are a couple of the new markets that we're looking at. Now, remember, we looked a lot at boots on the ground, United States boots on the ground. We thought that was going to be a big deal. It turned out that there was boots on the ground, but it was a rescue mission on a downed pilot there, so that was resolved, sort of not really what we were looking at. We were looking at a U.S. invasion. That's sort of what I was thinking about. Still very possible, but now we're starting to think peace. We're starting to think deal and starting to think peace. At least that's the way that the markets sort of look. Now, we don't know. $96 crude oil suggests that, yeah, we're still in the woods, still very murky out there. But if you want to talk about potentially some optimism, look no further than the recent uptrend in stocks, no question about it. So when you're looking at U.S.-Iran permanent peace deal, permanent's sort of a loose term. I don't know that I would say that. These timetables, I think, are legitimate. May 31st, 33%. By June 30th, 57%. So right now the market's sort of pricing in about another 2 months of this. I don't think it goes that long. I really don't. I don't think it goes that long. I think it probably goes another 2 or 3 weeks. You may even, a lot of reports believe a deal is going to be done this weekend. I just don't know who's going to do the deal. I really have no idea who's going to do the deal. It seems to me like you wouldn't even need a peace deal if you could secure the Strait of Hormuz. And maybe they're talking to regional leaders from the Iranian forces down that run that part of that region. Maybe they're talking to those folks to get a stand down. Who knows? I have no idea. What I do know is that these markets sort of suggest that there is reason for optimism. U.S.-Iran ceasefire extended. That's sort of what we're in the middle of right now. Extended by, they said, Trump earlier today said it's an indefinite period of time. So the ceasefire is sort of where we're at. Strait of Hormuz traffic returns to normal by the end of April. Only a 3% chance, and that's only about, 7 days. May 15th, 20% chance. That's a little bit better the next 2 weeks, 3 weeks. May 31st, about a 42% chance, about a 50% chance that things are back to normal. And by June 30th, most people believe that it's going to be business as usual there in probably the next 8 weeks. So a lot going on here. What I would recommend with these odds, with these prediction markets, sort of take them with a grain of salt. They're not gospel, but they are incredibly accurate. They really are. So can you trade using these, saying, okay, Polymarket says that the war is going to be over by the end of May, so I should go long? Well, I don't know that it's that easy, but we are seeing reasons, some green shoots that there is some optimism there for peace. So I think that you're going to get something done by the end of May. I'm confident of that, but I don't know. It's always tough to say. It's a war. Wars are unpredictable. And you can see right here your stocks are just trending a little bit lower. We'll see. We'll see where this day ends up, but it's starting to turn blood red, that's for sure. U.S. dollar, Canadian dollar, I want to go over two pairs. If there's no other markets, that's just fine for today then. Two more pairs. Let's go to U.S. dollar, Canadian dollar, and then also the Aussie CAD. I want to look at the Canadian dollar because of its correlation to WTI crude oil. Remember, as oil goes, typically the Canadian dollar goes, so theoretically we should be seeing a little bit of strength come into the Canadian dollar because we're up in crude oil today, but we're not seeing it. We're just not seeing it, and it's because the markets are used to it. They're used to this dynamic now. Believe it or not, we can get used to anything in life, and the markets are they're used to the war now. It only took 6 weeks to price it, so we're not seeing the aggressive correlation that you can see right here with these high oil prices. Boom, 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 boom. Canadian dollar is putting on a show against the USD. Now there's a little bit of a buyback today. I still favor the Canadian dollar, at least in the short run, over the USD just because of the high oil prices and the ability for those prices to move higher. But when we're looking at the dollar index, typically the USD is going to strengthen if things really escalate in the Gulf as well. So trading this pair, not the easiest thing to do right now, but I do like this Fibonacci retracement sequence right from that spike high that developed, let's see, what date was that? Back on the 13th of April, so what, about 10 days ago? That spike high, nice big sell-off, and now your pullback and your 38% is right there around 137.25. I think that could be a pretty good short. I think that if I was looking at this, I'd say, yeah, that's a pretty darn good short. Not bad at all. Not bad at all. Australian dollar, Canadian dollar, weekly chart. Interesting dynamic here. I mean, it's just been sort of just a runaway uptrend in a lot of ways. You can see all the compression that we went through last September, through October, through November, and then price really broke. When gold broke, the Aussie took off against the Canadian dollar. And right now, we saw a little bit of a buyback here a little bit of a sell-off here when this war began, and then things got really choppy, and now you've got a definitive break to the top side. Doesn't really make much sense. It doesn't make much sense given that gold is essentially in a holding pattern, and you're seeing crude oil sort of hold its value in very, very bullish territory, compared to the last several years. I'd be looking for a pullback here. I think that we could get a pullback bid. I'm not really convinced of market direction either way. I would respect the uptrend here, but something like this could be pretty tasty as well. A nice little bid right around 97.25. That's not a bad area. Not a bad area at all, and we're almost there. All right, everybody. Well, if there's no other questions today, I can go ahead and just sign off. I think that we're in pretty good shape going into the weekend. The market dynamic it's shifting. So when I say good shape, I mean that there's going to be volatility and things to trade. Tuesday, Wednesday, Thursday, great times to be in the market. Today is a pretty good trading day. It's awfully active in there. So if you're sort of holding the position, don't let it get away from you. Don't let these get away from you. You don't want to take a big loss here. That's for sure. Let me see. We have all right, one more market there. Bobby Bob, Australian dollar, New Zealand dollar. Absolutely. Let's get in there. Okay, so we did break above that 120 area. This was actually just fantastic market structure. You see this 120 zone. Beautiful stuff. Nice rally, pullback. Fell just shy of that 119 area, 119.25. Yeah, your low is 119.33. And then we sort of exploded from there. So if I'm watching this market specifically, and I say, okay, weekly chart, what would be my big level that I'd be looking at? You got some round numbers to work with up there. You've got 120 and you've got 121. Okay, we checked up. What is this week's low? This week's low is 121. That's absolutely unbelievable. 121.05, something like that. Absolutely. So 121 would be big to the downside. Right now we're trading 121.78. So I'd be watching this high really close, Bobby. This high right here, 122.03. You can start to see the compression that's really, I would say, building. The pressure is definitely building right beneath 122. So something like this, that's 3-week compression. Now, it's not really a bullish pennant. I mean, it really isn't. You do have this. You have the pullback. You might be able to call this a bullish flag, but it's not really. This is just compression in front of a key level. And the reason why is because this level hasn't been traded for quite some time, if ever. Okay, so it was traded back in 2013. So we're seeing some pretty good stuff develop here in this Aussie Kiwi is with regards to revisiting historic levels. Now, 122 clearly is the catalyst. So what you'd want to do here is, if you're holding shorts, I understand. You got your back against 122 and you're waiting maybe for a pullback. That's fine. I would love to buy a pullback potentially if we could get it from this level and get long. I think that would be pretty good. But as far as getting a clean break above 122, it's possible. But I would love to see it trade like 122.25 and then pull back, and then we could buy 122 and treat it as support. Right now, it's sort of acting as topside resistance. So I would be, I definitely have a bullish bias here. The market's headed north. Really not much question about that. But this is your cup with handle. It's really tough, though. It's not as clean as it should be. What I mean is, well, let's draw the cup with a handle. So there you have it, right? So there's maybe your double top. We could say that maybe that was the double top. That's probably what I would be looking to do. And then your handle would have been right there, right? Something like that. Unfortunately, we broke to the downside and sort of negated the handle. So maybe we could extend the handle like this potentially. You could. The biggest thing that I would be focused on, guys, is not necessarily the cup with a handle. I would be watching that 122 threshold to the top side. You've hit it once right there, twice. That's a vintage double top. I would be looking for the breakout above 122 and then potentially stepping up and buying back from that area as being downside support. You're welcome, AJ. Let's see. Ralph H., do you think a level from 2010 is still relevant for the Aussie? Yeah, I mean, markets have memories. No question about it, Ralph. And it's a great point. That's the first thing I did is I pulled up the monthly and I said, okay, when was the last time we traded this? Clearly we're bullish. That's a bullish trend. That thing is rocking and rolling higher, no question about it. As far as, a level, you're sort of trading back where April 1st, let's see. So this right here, this would be what? 2013's highs, this double top right here. So the top right there would be 126.38. Maybe you could look at that. Typically, Ralph, I would definitely say that, if you're looking at this level right here from March of 2011, where the high is up there at 137.96, absolutely. Everybody's going to be watching this because it's a swing high. But like some of these levels in here, probably not, just because it's jumbled. It's a mess. I mean, it makes for a nice headline. You can say, oh, we're closing on to the highs of 2013. We could say that. But is that really going to bring a bunch of sellers to the market? That high is 126.83? No. If they're going to sell from there, they're just probably going to sell 127s. But this area up here, and we're a long ways from it. I mean, we're not even close to this one. But 138, yeah. I mean, there's probably a lot of people that have that as a top side target for this breakout. So, look at all these months. I mean, that's just so much time has gone by. But it doesn't mean that these levels are irrelevant. But see how it gets choppy in here? The markets aren't going to care about this stuff. These deep overlaps and things, they're not going to care. What they're going to care about is the top, the swing high up there. Once we get up in there, if we get up in there, you're going to see a lot of sellers that are just going to dig in and try to dig in and grab a big move to the downside. For right this minute, what I would say is 122 is big. 122.50 probably going to be pretty big as well. But 125 even, definitely a big round number that I would be watching. And you could see that 125 even was a big deal in this range all the way from 2008 to 2013, which was what? The global financial crisis. 125, big round numbers. So right now you're seeing everything be repriced really across the board. This is being repriced in a big way as well. So to answer your question, yeah, but it would be more relevant if it was a swing high or a swing low from that far. Absolutely. All right, everybody. It looks like the world's going to heck in a handbasket right here since we've been talking. The VIX is beginning to spike. The Dow Jones Industrial Average is coming off in a big way. Cats living with dogs. Total hysteria. I mean, look at this. Look at this. Look at this action. E-minis, we took that out. What's crude oil trading at? 98.37. Okay, so something happened. Definitely something happened. Big time move. You've got that negative correlation going now where crude oil's up, stocks are down. Let's run a quick scan. Lebanon says no deal without Israeli withdrawal. Iran touts video of Strait of Hormuz cargo ship seizures as Trump keeps quiet on next move. Journalist detained in Kuwait after posting about Iran war is acquitted. I'm just not seeing it. I'm just not seeing the big headline that would drive this. Somebody knows something. Somebody knows something. There's no question about it. Let's get over to our financial news. Maybe we can get something going here. Yeah, I mean, these are all during the pre-market. Iran fires on 2 ships in the Strait of Hormuz. This is the new norm, guys. This is what it is now. It's price action. It's craziness. You see right here, WTI crude wipes out your intraday top, which probably washed a lot of sellers out. There's your intraday top. Let's go to a 1 minute. There's a top, compression, break, and now you're pulling back down in it. So if you're serious about trading it, you know, if you wanted to trade right now, we could do all sorts of things with Fibonacci's. Potentially, you could step up and take a bid, or you could pull back to a 30-minute chart, which is what I recommend, and you just work that current wave. That spike low right there in the guts of price action. Then there's your top, 96, probably 96.68, maybe 96.75s. Definitely possible there. The difference between the crude oil is you're up 5% on the day, 4.92%. And when I said the other ones weren't trending, stocks aren't trending, they're beginning to trend now, but you're only off about 1%, which isn't the biggest trend in the world. That's all. All right, everybody, that's enough for today. I'm going to go ahead and roll out. We will see you tomorrow for a Forex futures and stock market scan. We've got FOMC live next week. I'll have all that scheduled and ready to go by the time we wrap it up for the week. But interesting trading day. Just since we've been talking here, the markets have just turned blood red. We're down 550 in the Dow, and it's getting pretty heavy out there. We'll wait and see where these things close with about 2 hours and 10 minutes left in the markets. All right, everybody, have a fantastic trading session. If you need anything, I'm always available over at howtotrade.com. Just go ahead and come on over, send me a private message, ask me anything you want, and I will get back to you. Thanks for joining me, everybody. Trade safe in this environment. There's a lot going on here, and the money's definitely changing hands. So keep as much of yours as you can and maybe take a little bit out of the market. All right, that's a wrap. Have a fantastic trading session. As always, trade the action well, and we'll talk soon. See ya.